button now. And let me paste the agenda and notes one more time here. So we want to just popcorn around and do this really quick, but we have some new folks on the call, and it seems like part of what we're doing here is building this community. So just if we can do name and organization and maybe where you're calling in from today, we'll popcorn around pretty fast. And if you're not sure who's gone, I'll just call on the next person to keep it moving. And if this is your first call, there's also a link. It's in the agenda 1C. On the first call, we each, some different organizations, we created just a 2-slide template where we introduced our organizations, and we also did a slide on how the IRA was starting to show up in our priorities and work for the year. And so if you haven't taken a look at those slides, wanted to kind of lift those up again, as well as encourage folks that haven't completed a slide to introduce yourselves there. And that's a place, just a pooled resource for folks to strengthen this network. So I'm Jonathan, I'm in California, and I'm a co-founder with Undaunted, and I will pass it to my partner, Sarah Ross.
Hi, Sarah Ross, also from Undaunted. I'm out in Amherst, Massachusetts, and I'll let Jonathan keep calling on folks.
Okay, Sarah Heine, go for it. We'll do Undaunted.
I'm Sarah Heine. I'm Chief of Staff at Undaunted, and I'm in Buffalo, New York.
Great. Nell Williams, welcome.
Thank you. My name's Nell. I'm an education policy researcher at the University of North Carolina.
Great. Natalia.
Hi, everyone. Natalia Kopian with World Resources Institute, working on the electric school bus initiative. I'm calling from DC.
John.
Me?
Sure.
Yes, John Balf of the LEAP team, and I'm in Boston, Mass.
Great. How about Mary?
Hey, Mary Filardo with the 21st Century School Fund in Washington, D.C.
Tim?
Did you say Tim or Kim?
Oh, Tim.
Tim.
Go for
Tim
it.
Unruh with the National Association of Energy Service Company in the DC area.
Awesome. Tish?
Hi, Tish DeBlanc with Generation 180. I'm in Charlottesville, Virginia.
Thanks, Tish. Emma?
Hi, everyone. My name is Emma Hines with RMI, and I'm calling in from Dallas, Texas.
Catherine?
Hi, I'm Catherine Roboff with WRI on Natalia's team, and I'm also in Washington, D.C.
Great. Kristen?
Hi, I'm Kristen Kime. I work with Tish at Generation 180, and I'm in Washington, D.C. as well.
Right on. Christy?
Hi, I'm Christy Kimball. My pronouns are she, her. I'm a consultant working with Undaunted in the Pacific Northwest, and I'm in Bend, Oregon.
Brian?
Brian Fox, Green Schools National Network with Jenny in DC as well.
Great. Kelly?
Hey there, everybody. I'm Kelly Tapio with Samskara Studio, and I am in New York City area.
Awesome. Ken? Oh, Ken, you're on mute, I think.
I was being so disciplined about keeping myself muted. My name's Ken Doan. I'm in Oakland, California, and I'm also a consultant writer and editor with Undaunted.
Right on. Jenny?
Jenny Seidel, Executive Director of the Green Schools National Network. I'm out here in the center of the country in Iowa. Thanks.
And Anissa, are you there?
I am. You called me right as I was eating. Sorry. Anissa Hemming. I'm the director of the Center for Green Schools at the U.S. Green Builder, USO, and I'm in DC.
Great. Shannon.
Hi, this is Shannon Crooker. I'm with Gen 180. I'm based in Reading, Pennsylvania.
Right on. Andra.
Hi, I am Andrea Glenn. I'm the Chief Innovation Officer at 10 Strands and in California.
And Mary Delay.
Hi, I'm Mary Delay. I'm with Undaunted K-12 doing some work to support in Massachusetts.
Right on. Anne?
Hi, Ann Wright. I'm with the Massachusetts Building Electrification Accelerator.
Good morning, Ash.
Hi, all. My name is Ash Sloth. I work with Action for the Climate Emergency, and I'm calling in from Oakland, California.
Joel.
Good, I'll get to the mute button. I'm Joel Rosenberg from Rewiring America. I'm just outside DC.
Great. David.
Dave Bandy from the American Federation of Teachers. I'm driving somewhere about 95.
Serena.
Hi, everyone. I'm Serena Compass. I'm a policy analyst with Rewiring America, and I am based in Mesa, Arizona.
Thanks. Carolina.
I'm Carolina Chacon. I work with the Alliance for Electric School Buses based out of Las Vegas, Nevada.
Right on. Harley.
Hey, everyone. Harley Stokes with Blue Green Alliance. I'm based in Baltimore.
Michelle.
Hi, everyone. Michelle Faggart with This is Planet Ed at the Aspen Institute, and I'm also in DC.
Great. Riley.
Hi, Riley Loveland, New Buildings Institute here in Portland, Oregon. I'm gonna have my mute and my camera off because they're redoing our sewer outside and it could get chaotic, but I'm here. Hi, everybody.
Great. Sounds like an important project. Amy.
Hi, everybody. Amy Cortez, Program Director at New Buildings Institute, calling in from Pittsburgh, Pennsylvania.
Right on. Sasha.
Sasha Podolsky with AASA, the School Superintendents Association. We're based right outside DC.
Great. Craig.
Craig Schiller, Executive Director of CHIPS, the Collaborative for High Performance Schools. I'm calling locked out of my new co-working space in Washington, D.C.
Okay. Anna.
Hi, everyone. I'm Anna Doty. I'm with the Climate Jobs National Resource Center based in Seattle, Washington.
Great. Oren.
Hi, everyone. Oren Kadosh, he, him pronouns, Labor Network for Sustainability, and in New York City.
Great. Anthony.
Hi, everybody. Anthony de Guzman with GreenLink Education, and I'm based in Philadelphia.
Right on. Justin.
Hi, all. Sorry, I'm off camera. I'm not feeling great today, so we're going to stay off. But I'm a senior policy analyst with the National Education Association, and I'm in New York City.
Thanks for joining, Justin. Hope you feel better. Laura.
Hi, everyone. Laura Shifter with This is Planet Ed at the Aspen Institute in Arlington, Virginia.
Great. And William.
Hey, everybody. William Volker, CPA, Efficiency Energy, calling in from Washington, D.C.
Great. Thanks, everybody, for taking a few minutes on that. Anybody else that we missed? All right, I'll turn things over to Sarah for what's new in IRA land since we last got together, and we'll get the conversation started.
Great, yeah, and this is going to be quick for me. Thanks, everyone, for getting together again. What an awesome group of people. I don't know about everyone else, but I've really enjoyed reading, 136 new pages from the IRS about direct pay. Beach reading for sure, and way above my pay grade. So I'm, that is what is new, and the reason for us getting together sooner than we had initially anticipated. So thanks for coming together. As a reminder, we're focusing a lot on the tax benefits in the IRA, specifically the investment tax credits. And we'll be hopefully talking some more at a future meeting about 179D. Will's near and dear to his heart, partly because these are the ones that are available to all schools. They're not competitive and they're available for a good long chunk of time, and they are new and exciting. And this direct pay piece is probably top on the list of what is new and exciting, and really opens up these tax benefits that have only been available to private sector entities directly until now. So this is really exciting stuff. The goal here today is not that we can all recite the 136 pages of the IRS tax verbatim, or even that we know all the details. How we're really seeing this is like we all need to develop a certain level of competency with this stuff, depending on the seats that we sit in. But really, this is all about us kind of developing together a confidence in this new mechanism, a confidence that we can speak about it with stakeholders and really, kind of push the whole field forward that, we can do this work and we do have these new tools. So you can see if you're in the meeting notes that we've been pasting obsessively into the chat for newcomers, that we do have links to the new IRS site and the new White House site. There's lots of kind of sublinks and materials in those. We also added at the top of these meeting notes in the resources section a new set of a new toolkit from the Congressional Progressive Caucus that has a direct pay partner toolkit and FAQ page. So lots of new stuff coming out into the world. We talked last time about a new resource from Climate Jobs National Resource Center that we're still excited about and expecting. So some new resources out there. But really, I'm going to turn it over to two new experts, because we're all new to this stuff, new experts, Natalia from WRI and Will from Realize, to talk about some of what they've learned as folks that are professionally equipped to translate some of this for us. So Natalia, why don't we start with you? You and I had a good chat last week as we were both kind of wading through this work and through this new language. Do you want to come off mute and talk to us a little about what you learned from looking at the new IRS guidance for this new exciting direct pay?
Yeah, sure. Thanks for having me. I actually had a couple slides. I don't know if Jonathan, if you can give me permission. I think it's just easier to look at this stuff visually, if that's possible. If not, I can.
Co-host you are, my dear.
Did I do it?
I did it.
And let's see. Okay. You guys should be able to see my screen now. Is that right? I'm seeing head nods. Okay, cool. Okay, yeah. So as Sarah said, I'm just going to talk a little bit about some big picture stuff, some big takeaways, particularly from the school bus perspective, but I think a lot of this stuff will apply elsewhere. So I'll start off with a little bit of some glossary, some key terms, a brief overview about what elective pay is, how it works. Our big ticket item is the third-party money and how it fits in with direct pay, and then closing it out with a couple questions that we still have. So direct pay is also the same thing as elective pay, which is also the same thing as section 3417 or 6417, sorry. Already getting the numbers mixed up. That's the actual text from the Inflation Reduction Act. And then these are the three kind of tax credits that I think are most relevant to our work. So you'll hear me talking about 45W mostly with an example I have later on, but those are the other two as well. So elective pay is a pretty novel addition to the tax world. It's a provision that allows tax-exempt entities to access these tax credits that were established in the Inflation Reduction Act through an actual direct payment, a cash payment that will come to the school. So the tax-exempt entity that's most relevant to us is obviously school districts, but there's plenty of others that aren't even listed on this slide. But it's a very wide-ranging provision that I think is really going to change the game and when it comes to clean energy investments. So some of the tax credits that are available for direct pay are a total of 12 of them. I'll share this slide deck afterwards as well, but there's a whole bunch of provisions that are available for direct pay, as the three that I've listed as well. And then also this great resource that Sarah shared with me recently. It shows, all of the 12, not all of them obviously are applicable to school districts. Some of them would be pretty hard for school districts to achieve, but it also shows the side for transferability, which is part of the guidance that came out, but I won't get into it just because I'm not an expert on it just yet. But that is also a piece of this to keep in mind. So some big dates to think about as we go through for the rest of the year. Elective pay as a provision is going to be available through the end of 2032. So we have a good 9 years or so to get it done and to make sure schools have a really pleasant experience with this. The pre-filing registration portal, which I'll talk a little bit about in a coming slide, that will launch late this year. I think late fall 2023, but could be before the end of the year. That is where we'll actually see all the information that IRS will be requiring school districts to upload and implement in order to qualify or to successfully file for their annual filing, which is due May 15th. That's the deadline for nonprofit entities. And then one other thing I think is important to keep in mind with dates is that there's no actual statutory requirement or deadline for the IRS to issue direct payments for school districts. So they don't have to give the payments out before the May 15th deadline. When you think about, our own individual tax filings, you think if I file earlier, maybe I'll get the refund earlier. IRS didn't make a deadline for itself here. So that's plausible that school districts would be incentivized to kind of file this quicker to get the payment quicker, but we just don't know yet. I think that's something we'll find out later on once the pre-registration portal is published. So turning a little bit to how a school district actually applies for direct pay, I think the basic step that I didn't put here is that they actually have to fulfill the project, right? So they have to buy the electric school bus, they have to construct the ground source heat pump. They have to do, whatever that the project is that they're trying to qualify for of those 12 credits, that has to be completed first. And then after that's completed, school districts will be able to go through this pre-filing registration requirement. This is where they'll implement and upload a bunch of different information, which I have on the next slide. But at the end of that, they'll receive a registration number. This is really key because that registration number is what they'll actually be using to put in their Form 990-T for their annual tax filing. So it is a two-step process, which will require a lot of education and resources and help on our parts, I think. And then one other key thing I wanted to include here is that from my understanding, and I hope someone else maybe can correct me, school districts will have to do this pre-filing registration for each individual product under each credit. So if they're bought 25 school buses and they're trying to qualify under 45W, they would have to do the individual process for all 25 of the buses. And then those 25 registration numbers would be included in their Form 990. That's the process as I understand it, but I'm hoping we get more clarity on that as the portal is launched towards the end of the year.
Natalia, can I jump in here and lift up a question that Tim put in the chat?
Yeah.
And it looks like maybe Harley, Tim, if you guys want to come off mute and let's just have a quick conversation about the timing wise.
I can't see the chat, so that's helpful.
No worries. So timing wise, I know they can't actually file in May 15th, like they can't get the tax credit until the work has been complete, but might they be able to do the pre-filing? Like if it's, this fall and I expect to finish my project, but it's not in service yet. On October 1st, when they launch this portal, I could probably pre-file, get my number, get my project into service before the end of the calendar year. That would make me eligible for the tax credit in the 2023 calendar year, and then go and apply on May 15th, having finished the project within the calendar year. Does that sound plausible to you, Natalia?
So I think that depends on what the individual project is and what IRS, because there's two pieces here, right? There's the guidance for direct pay, and then there's also the specific guidance for the underlying tax credit that schools are trying to qualify for. Yep. So what the tax credit definition for a completed project is, that's what IRS is going to be asking for information about at this pre-filing stage. So for a school bus, they might have to have some kind of documentation that the bus is on the road, or that I'm not sure what those details are going to be, but whatever IRS is going to be asking for at this pre-filing stage, it's going to be to show that the project is complete at that point. That's what my understanding is, but I think that's a really good thing to be including in comments, which I have on the last slide, but there are comments due at the end of August. That's I think a really great thing to clarify is, if that's the project's going to be done.
Is because I imagine from pre-filing to the point that you file, there's going to be a time frame that the IRS does some processing and issues you that number. And the problem is if you have to build it, then pre-file, then wait, all that waiting time, you're paying interest to somebody for the money that the tax credit is covering.
Yeah.
Because you've had to pay for it already.
Yeah, I think that's why they're gonna ask that the project is fully completed before you can pre-file for it either. It's going to have to be a completed project within the calendar year in order for you, because that's what they're trying to avoid, right? They don't want you to be hoping that you're going to qualify for the credit. Let's say you didn't meet all the requirements, but you started the project and you're pre-filing and you're waiting to hear. I think they're trying to avoid that. So they want the project complete, because it's not a grant, right? It's you did something. If you think about it in an individual tax payer point of view, you did something this year and you're getting a refund kind of for your action. You had already completed it. So it's like on the back end.
I understand the process. I just think of the amount of money that we will be wasting that could go to facility improvement.
Yeah, Harley,
it's going to be massive.
Harley, why don't you jump in?
Yeah, that's a good point, Tim. And the comments are due August 14th, so there is time to provide that input. But just wanted to reemphasize what Natalia was saying, because in one of the IRS webinars, they had this great little timeline, and they had like if you're, for example, you had a school putting a project into service in 2023, you goes into service, then you pre-file. Then you file by May 15 of 2024. Then your return is processed and you receive the payment. So that's how they were presenting it as well.
Okay. Rules are rules. It's just sad.
Will, do you have any insight on this piece that you want to throw in?
Pulling up that picture that was just referenced. Let me see if I can share it with everybody.
Yeah.
I was taking pictures of the White House webinar as it was going on, which doesn't sound exciting to you guys. And apparently the reading doesn't to Sarah, but I was loving this. This is 5 o'clock on a Friday before I get a beer. I'm reading this. So with that introduction, I'm Will Volker, and I'm a CPA, and I'm a expert in the 179D deduction, which I'm happy to hear everyone having some of the same problems here that we've been living with the 179D here for more than 10 years. All right, so I'm going to try to.
Hey, Will, sorry, I was just going to ask it. I was asking specifically if you want to opine on this timing with the direct pay, but I'm going to let Natalia finish her bit here.
Okay, so I have it keyed up here. I can show you the timing thing. So this is something that we've dealt with 179D for years, which is you file, and I'm dealing with 2018 projects right now for the IRS to review, accept, and then pay the refunds to the designers, which our government entities have negotiated savings. So this is a double-edged sword. It's annoying that we have to, or maybe even economically disadvantageous to do this. But what it also means is that you don't need to have an answer right now. And that, we can compare projects apples to apples now, and we don't have to have this urgency to have all the answers to get it done. But very confusing and aggravating. Agreed.
Sarah, I think you're on mute.
Yeah, Natalia, do you want to keep walking us through the rest of your slides?
Sure.
Awesome. Thank you.
Yep. Okay. All right, so jumping back to where we left off, a little bit about the pre-filing process. This is something we'll get more clarity on towards the end of the year when the portal is actually launched, but it's likely to require school districts to provide a certain number of information. So we know that they'll have to explain or provide info about their, taxpayer identity, what the school is, where is it, that sort of thing. Information about the credit that they're intending to earn. So listing, 45W, 30C, and then information applicable to that specific credit. So whatever kind of verification that you would have to provide to say that you bought a school bus and that it's in service, that's kind of explaining your eligible project or property that contributes to that credit. And as I mentioned before, after that, they'll receive a registration number that they'll have to use on their tax return when they're selecting the elective pay option. So the big fun thing for us is this third party money piece. This was something that we were really pushing for as WRI when we were submitting comments back in November on direct pay. And it's a little bit confusing. So I have an example in the next slide that I think might help a little bit. But the basic idea is that it does the direct pay provision does not discourage school districts from receiving or going after grants or loans, that they can also use the tax credit if they're eligible for it. So basically the two can be stacked. The limitation there, however, is that the combined amount of the grant and the tax credit cannot exceed the overall cost of the project. So bottom line, the school district can't receive basically more money than they paid, or more money than goes in for that actual project. So I think this little example might help a little bit, so we can walk through it. In this scenario, both the buses cost for $100,000. So that means that that's the cost basis of the bus or the project. And in the example on the left, the school received a $400,000 grant, right? So when you combine it with the tax credit for school buses 45W, which the maximum there is $40,000, the combined amount exceeds the cost basis. So the school district, while they're still eligible for the tax credit, it would be reduced to $0. So they wouldn't actually be receiving anything. Whereas on the example on the right, let's say they're receiving a $300,000 grant from the Clean School Bus Program at EPA. They're still eligible for the credit, right? They're receiving that $40,000 credit, and those two amounts combined are what are calculated or used in the calculation to develop the cost basis. So even though the school district, they have the $300,000 grant, they still need $100,000 maybe from their school budget or other unrestricted fund is the term the IRS used. They use that amount to pay for the bus, but that $100,000 unrestricted fund doesn't go into calculating the cost basis. So the combined amount of the grant and the tax credit is $340,000. That's less than the cost of the bus. So they get to qualify and receive the full tax credit amount. I hope that was helpful and not too confusing. As I mentioned before, the comments are due August 14th. And in this deck, I actually linked the site for where you submit comments, so it's easy to find. There's also a public hearing if folks want to participate. And then I thought to close it off, I'd leave some kind of remaining questions or thoughts that we're considering as we're formulating our comments. So the first being, what's considered an unrestricted fund? I'm sure it's somewhere deep in IRS guidance, but maybe making that a bit clear for school districts to understand what funding would count as unrestricted funds. And then second, if I go back to the example, the question being, can the tax credit be prorated, right? Does it have to be, you get the $40,000 full amount of the tax credit, or does it, or you get zero, or can it be somewhere in between? You know, can you get $5,000 of the tax credit if the grant amount is a bit higher? So seeing how that fluctuates, I think would be really important. And then, as we mentioned before, kind of the different definitions of completed projects make this a bit confusing. And just realizing that there's two different tax credit guidance kind of at work. You have your actual project that you're qualifying for and the elective pay. And then obviously this is a really significant lift for school districts. So I think making the guidance as clear as possible when it comes to the pre-filing piece, and then making sure our collective efforts are out there to try to help school districts be successful in the filing would be really important. So yeah, that's all I have. Those are the big picture takeaways from my end. So I'll pass it back to you, Sarah.
Thanks, Natalia. All right, Will, do you want to give us a few minutes from your CPA perspective on kind of what you're seeing here with this direct pay guidance, maybe pulling from some of your experience with 179D, and some sense of how you're thinking about guiding schools and communities through taking advantage of this new provision.
Yeah, happy to. So we used to kind of joke with our clients with 179D that like you're all now tax experts when you should be experts in many other things. And so I want to first say, Natalia, that was a great presentation, digesting what was the possibly most boring webinar I've ever sat through in my life with the White House last week. And so for anyone else who was on that with us, great job. I'm just going to kind of give you all a little bit of just really quickly my history. So I've been dealing with the 179D deduction, which has a special rule for government-owned buildings to assign these tax benefits and then negotiate savings in return to feel savings on their project akin to the direct pay incentive here, albeit even more interesting because we have to go and basically negotiate and sell these tax benefits. Whereas here we're going to fill out a form and hopefully the government is just going to make a direct payment. But what I would say is that what the IRS, or in my opinion, what the IRS is doing is trying to make things kind of fit into the IRS's already normal modus operandi. I don't know if anyone on the call represents a private school, but public schools are not normally filing Form 990s, which are for nonprofits. Now, 179D, this is territory for us in that we've worked with government entities to deal with taxes for almost 20 years here now to use a tax program in order to get additional funding for their projects. So we hear you, we hear it from our clients that now we're getting assailed from all parts, not just about 179Ds, but now about ITCs and PTCs and other. And so, the first thing that I would say is that this is your money and you need to reserve your rights to deal with it. And no one else needs to be, telling you what you should be doing with it or how you should be dealing with it. Because we've seen that with 179D, and we've seen problems with people taking it without government entities even knowing that it's happening, much less properly authorizing, documenting, or negotiating savings in return. And I know Mary Filardo, who's on here, has heard me talk about this to extremes before. But the good news is that this should be more straightforward than the 179D process. Yes, we're going to have to fill out a Form 990. Yes, we're going to have to go through some sort of certification or verification process. To Tim's point earlier, yeah, we're going to have to finance these projects. Maybe there'll be some unique financing mechanisms to help bridge that. I know that my new firm Realize is actively chasing that bogey right now. But at the end of the day, this will be a way, like 179D, to stretch your dollars further and do more good with the limited dollars that you have, and then provide an ability to reinvest them to get a little, perpetual sustainability machine going to help increase the velocity of the investments in your buildings. So I'll just stop with that because there's going to be a whole bunch of questions. But I want to
Mary has one in the chat.
We're going to do this, and we can help you do it.
Awesome. Thank you, Will. Yeah, Mary has even a question in the chat. What would a school district even use for its tax ID for the IRS?
Even government entities are going to have EINs, employee identification number. So the number that's in the top left of when you do your payroll, that's what you're registered as. So they'll be able to use that.
Got it. Folks, what other questions do we have? I know this is not a shy group. Harley, you want to jump in?
One thing that Mary Filardo and I had talked about was you have the new system, right? Whatever you're going to install with these clean energy tax credits. And if the tax credit would cover the decommissioning of the old system. And my understanding from the guidance is no, but I'm curious if others also read it that way.
Yeah, Harley, that's a fantastic question. It's what I've been trying to understand as well. I mean, you think about going into a school, you might even have asbestos replacement that has to happen in order to install the new system. You can't install the new system without abating the asbestos. You may have to tear out walls or rebuild walls and create ductwork or pipe raceways. There's a lot of questions like that.
Isn't that something that, in terms of the comments, that we should make sure that they hear, that you essentially can't utilize the benefits of this, particularly for low wealth? I mean, I was trying to think about even limiting the impact. It could be that, and I don't know that the IRS would do this, but that for the high poverty districts, that the way they're calculating their basis includes the decommissioning. You know, somebody sort of understands the potential fiscal impact of that, but it seems to me that at a minimum, we want them to understand that this is sort of imaginary, except for new construction and kind of very wealthy districts that can afford to make such major changes in their systems. But, you know, I don't know whether that would make a difference if they heard from a bunch of folks on that, whether or not the IRS would, in their comments, you know, clarify it to say, oh yes, we really did mean that the basis includes these things. I mean, you could imagine for buses, throwing away an old bus is not nothing in terms of its environmental impact and other things. So I don't know how they're thinking about all these things.
Yeah, you know, we're talking about ground source heat pumps. You might have to tear out a parking lot to put your field in, and then redo that parking lot that may have to meet new standards that didn't exist when the old parking lot was put in.
Right.
So it strikes me that these are outstanding questions that I still have, and it sounds like I'm not the only one about what is included in the basis. Just to be clear, these aren't questions about direct pay. We're kind of more broadly talking about remaining questions in terms of implementing these ITCs out in the real world. Yeah. So just in terms of like the comment, you know, the comment period that we were just talking about for August and public comments, that's specifically on the direct pay mechanism. And we should be sure to be focusing, you know, our public comments in that venue, specifically on that part of the mechanism. But these broader questions of what is the basis? How do we calculate this 1 megawatt threshold that we know is important? I think those are still outstanding questions. Does anyone have any intel on when and how we might hear more guidance on the basis questions?
I'll just jump in if no one's going to do it quickly and just say that I don't know if any of you have been following this, any other tax nerds on here, but basically the IRS has gotten whacked with a whole bunch of lawsuits, which has said that if they issued interim guidance that did not go through the formal rule-making process, which includes public comment periods like we're in right now, then it can get thrown out. So they're being very careful right now to go through this process. And so every organization that I've seen represented on here should make a comment and ask those questions actively, because then it's there, then they have to respond to it. And so what constitutes project cost or the adjusted basis of the project is something that I have not seen addressed yet. And if enough people or organizations ask for it, they're going to have to provide a calculation. And then also, if you provide them your commentary on concerns, like exactly what Tim was just talking about, like what if you have these other associated costs that have to be done, can you include those or not? That's something that they're going to have to think about and maybe include.
Great. Thanks, Phil. Other questions here on direct pay specifically, or, you know, more broadly on these tax credits that we've been talking about?
I mean, Laura, I think you put a note in there about the way solar treats kind of roof conditions, right? And I mean, if you just replace your, you know, oil-fired boiler, it's a whole lot cheaper than, you know, converting your system to a ground source heat pump. So the excess cost associated with the electrification is excess cost. I mean, you can't do it. You can't keep the, you know, the oil-fired steam system in your schools without getting rid of it. So in the same way that, you know, you're not going to be able to put your solar panels on a roof without making sure that roof isn't, you know, kind of structurally and sort of design-wise capable of reasonably supporting the solar panels, you know, without sort of being an idiot and putting them over top of leaks.
Right.
So, I mean, part of what I don't know is, if it got challenged by, sort of like how protected does the industry and the districts, do they need to be? Kind of what's their risk in terms of the likelihood that IRS is going to go after a school district for kind of reporting its basis, for the whole project, as opposed to, I just don't have any sense. And I don't know, William, maybe you do, in terms of how aggressive they've been on the 179.
Really, with 179D, they have been aggressive on enforcement, not from the government entity side, but on the opposite side of the table of folks taking the deduction without having it certified, ineligible designers, let's just say gaming of the system by folks that are not the government entities. And so I don't think I would see them coming after. I do see the direct pay as something that will have enforcement involved in it, but no one on this call is a bad actor. So I don't think anyone on here has to worry about that. I'm more worried about the boiler rooms that are trying to figure out how to get these things out of you, as opposed to you all who are trying to use them ethically and correctly. I saw Carolina's questions here, and I'm just going to hit a couple of them because I know a couple of them. The private, all nonprofits, tribals, anything that is not a government entity but is a private nonprofit is going to qualify now for this. Tribal, which were left out previously, are going to qualify. As far as the urban and low income, it's based upon the census tracts, and I think there's a tool on either the White House or the energy.gov website where you can go and look up the census tract to see whether it's considered low income. And then the ownership requirements, at least as it deals with 179D, the entity that pays for the project is going to be the one who feels the benefit. It's going to come down to like the actual contracts. I could see how this could change certain things that folks on the call may have dealt with previously, where you have, leasing of the roof with power purchase agreements, and it's a financing versus an operating lease, and does it revert back to the district? Some of that should actually be made more simple now, where we don't have to do these weird flip partnerships in order to move tax benefits to private parties. That's the one great thing that they did with this, is just the government entity does the project, fills out the form, files a tax return, gets a refund. Let's hope within 1 year of the completion of that project. But I'll stop there.
A few other tidbits, and maybe someone can help me. I do remember reading they do have a concept, of course, of like excessive payment. So if people claim for a elective payment that is deemed too high in an audit process, the one that Carolina mentioned there about auditing, they do have, there was something about, you have to pay the extra amount plus 20%. Does anyone else remember reading that? So if they find out, if they audit your project and you got a credit for 100K and you shouldn't have, and you can't give them back up to justify the 100K, you will have to pay a penalty plus 20%. Is that right, Will?
Yes, that is a good point. That the other thing that they do and that they have enforced before is claiming a deduction, let's just say, for more than the effective product cost. They will be controlling for that. But two things that were important that they did note is that, number one, that the direct pay incentive is non-taxable, which is a big deal, because like housing authorities are worried about that, because if it's considered taxable, it dings it reduces their subsidy. And then the other thing they said, but Natalia already hit on this, is that you can stack incentives up as high as you possibly can, so that hopefully you're only, say, financing that bridge to get there and then the remainder at the end.
If folks are feeling overwhelmed by this, I want to provide one happy note that is buried on page 18 of one of these documents, which is for the Paperwork Reduction Act, they had to estimate how long it will take people to do this pre-filing. And they estimated that the average burden per respondent is 6.3 hours. And that includes getting all your data together, going to the form, doing this, doing that. Tim, I don't know, you just made a face. Does that sound a lot or a little? I felt like, 6 hours for the whole kit and caboodle. We're spending an hour here together, right?
Yes, in a school district with 10 projects at 10 different schools, that's 60 some odd hours for that one person in charge of it to put in.
Yeah, I hear you.
That could be a little bit of a burden.
Yeah, yeah.
Or those
That's my
school
idea
buses.
of a romantic lunch going through tax forms.
All right, other questions? New folks, don't be shy.
I'm wondering if anyone else read this, but there's a footnote for the list of the tax credits, and this is specific to 45W. So apologies, because I know that a lot of folks are working on other ones, but it says that the entities that are eligible for elective pay of the commercial clean vehicle credit is a subset of the other entities. And then somewhere else I read, I can't remember where, it seems to say that like rural co-ops and the private nonprofits or 501c3s are not eligible for 45W. And I was wondering if others had that read as well. And here's the IRS publication that I'm referencing. It's in the footnotes, so the second page. But I guess that's my concern, is that like specifically for the tax credits that relate to vehicles, you have different folks that are eligible for each.
Got it.
I have a question on that then. I know for solar, there's models for a workaround where you have a for-profit entity own a solar system on a nonprofit site and then pass those tax benefits to that entity. Is there a leasing model that could work if that's the case for vehicles, where a lease is owned and leased by a for-profit that takes advantage of those credits and passes those savings to the tax-exempt entity?
I think it would have to be the other way around, where you would have to have the leasing entity providing the financing to the qualifying agency, nonprofit or government agency, which would need to own those assets to be able to then file and get the ITC. And then maybe, like we're wrestling with this at Realize, which is how would you finance against that or provide for that, or assign it after the fact, you know what I mean? Or provide an anticipatory financing in the beginning and then leaving that, the performance risk on that for-profit entity. We are also looking at, funding a nonprofit funding agency, like going out to all the big, institutional nonprofits and to put money into this and to make a program that would just be like a big revolver to do this. So I think whoever said that earlier is exactly right, that there's gonna be some creative financing, but hopefully it's gonna be simpler than it's had to be before with flip partnerships and stuff like that.
Yeah, I do know, like I worked on a project at my alma mater, RMI, where we put solar on one of our own buildings and used a third party. So they had that creative financing mechanism. We worked with the utility to make it work. So it works. It's done, but at least that organization, I think, only did it small scale. I think schools and churches, not at a large scale. Thanks.
Yeah, and I think it has a 1 megawatt maximum too on solar systems.
I think I want to try to frame up a question. I'm like, maybe this is for Will or Natalia. Let's. I want to like put myself in the shoes of I am advising, young youth climate leaders, across the country around as they're thinking about campaigns this fall, with school, their school boards or superintendents as targets, or I'm talking with school board members or district facilities, directors, or I'm advising my, my teachers union, leader, around, can we kind of hear just a little bit of like bottom line, kind of setting aside sort of, we know there's some questions around cost basis. We know there's still some questions around mechanism, should we be kind of walking the earth collectively now, kind of saying to school districts, and the, as advocates and technical assistance providers that, the IRA, has these unlimited non-competitive tax incentives to help defray the costs that should be part of your capital stack, as you're thinking about these projects for solar or ground source heat pumps or energy storage or some of the, I know it's a little more complicated as we get to buses and energy efficiency, but like, are you comfortable with that, kind of us, offering that message across the country, or how would you amend what I said or build on what I just showed?
Before people answer, Jonathan, you've heard me say this before. I think that's the right answer. I think that's the right question. That's so important. So I would love for us to have something that we can agree on for that? Because we're all going to be asked those questions. Yes.
Yeah.
My answer is hell yes.
Yeah,
you
same.
should be telling your kid, like the kids, instead of playing Fortnite Save the World, they should be actually saving the world. They should be actively holding their school districts accountable. How are you spending the money? And how are you spreading that money further to save the world that I'm going to inherit in a few short years? I want to know that my district knows what its carbon score is. I want to know that it's doing, I want to see the list. I want to see the low-hanging fruit. Do you still have T12s in my building? I want them gone. I want LEDs because the utility will pay us to get rid of them, right? I want, like, now that we have the ITC, because the way we used to have to do it, you needed like a rich family office or like a corporate entity that would buy the tax credits at a discount in order to provide less money than you need to actually do the project. Now we have a way where government entities, which can borrow at low rates, can go and cover schools in photovoltaics. Schools and churches are the smartest idea for PV because you only need power during the day and you have huge roofs. So how do we, instead of having to tap into that very limited, investment tax credit market, now we have to go tap into the much larger markets to go pay and get this done now. I want the kids to be looking for how can they be saving the world faster? Period. Soapbox. Done.
Thanks, Will. Natalia, anything you'd add to that?
I can't follow that. That was exactly right. Yeah, I mean, I think the money is out there and we need to help equip our schools and our partners to make sure that they can successfully go after this money. Like Will said before, this is our money, it's taxpayer dollars. It's just going back to our school systems. We need to make sure and show Congress that this first round, second round, like it's successful. School districts are going after the money and there's a need for it. So I think all of our combined efforts and resources and help we can provide for schools to make sure that they're equipped to do it successfully and get those 6 hours down to 4, maybe we'll bring the average down. I think that's really important. So I can't, speak highly enough about this opportunity. I think it's really a game changer.
Awesome. Well, thank you, Will and Natalia, for sharing and being here today.
Can I just be a little, probably the old lady in the room? It's actually really more complicated than that. Than having, it was part of the lesson that I learned in the advocacy in the District of Columbia is that getting the money is actually not the hardest part. It's not at all. And you can get money and waste it just spectacularly. And you can get it and do the wrong things and do it in the wrong communities. And so without kind of giving the communities, whether it's the parents or the students or other civic groups, other tools to incorporate their climate related concerns with the broader problem of structural racism in the way public dollars are spent, without issues around labor participation and and the education planning and equity. Anyway, I just think that they're going to need more tools, and that having money is like, I thought that's why we called ourselves the fund, because we were looking for alternative ways to finance school construction, right? And I as a young parent thought if we just had the money, it would be okay, right? And so I think that I would urge everybody as you're kind of doing these campaigns and the initiatives to help folks understand that they have to do it as part of a planned and broad engaged initiative. And so and I think people will get that, right? You can't just electrify your HVAC and end up with a good school. You can't just put solar panels or just have, electric school buses and have a great, community. So I think we get to aspire to something better than just ground source heat pumps, right? So I think that what we want is to make sure that there's a kind of optimism that this brings, which I think is what's really exciting, but to make sure that folks sort of have it in context, understand that, it's like when I started as a parent, my kids never went to a modern school. They never did. But I worked on it their entire entire school career. But my grandkids are in modern schools in the District of Columbia.
Right.
So, but young people can do that, and grown-ups can do that, and poor people can do that. I mean, it's really, we're hardwired to do that. So I would just encourage folks to make sure that they're planning and that they're integrating this with other important well-being and goals and objectives. That's all.
Here, here.
Well,
here.
Yeah,
Accountability.
Well said, thank you. Yeah,
and data, like,
these are tools within that, new tools within that broader context. We are at time and wanted to just flag a couple quick things. This is item 4 on the agenda before we close out. Building on the conversation last week, and even Craig, your kind of ask and comment today, we are planning this summer to put up what we hope will be sort of a one-stop shop on curated resources for IRA and ITC for schools, and welcome kind of feedback on that, version 1 of that and collaboration to get that going. So we'll have that sort of to support back to school campaigns across the country. Secondly, there's been some comments on this conversation around like, how can we really make sure that state leaders, see agency leaders and or legislative leaders see this opportunity and are doing what they can to raise awareness or remove obstacles. So we've started kind of just brainstorming a quick framework of like, 4 actions state leaders can take now, and welcome folks who want to kind of, chop it up with us and try to like work on that white paper or that, brief. As has been mentioned, the direct pay guidance comments to the IRS are happening, and due in August. So we kind of put that information here and really encourage folks to think about putting in a comment. And if you are planning to do a comment and want to kind of note it in the notes, that could be a place where folks could see who else is doing that, so we can kind of coordinate a little bit. Also, feel free on either project A around working on the resources page or the state action. If you want to be involved, just note there in the notes as well. And maybe if we have another moment, I know Ash, I've seen in the chat, you guys are working on something. Are there just other summer work streams that folks want to just kind of say into the universe for a minute before we get off, so folks know about what folks are working on, and then we'll close out.
I saw just a couple of people ask like, what are you doing right now? Chrissy, I think you asked that maybe twice here. We started building our schools campaign work, where we're running a couple of concurrent like campaigns that are running on parallel tracks simultaneously under our IRA strategic framework. So we're looking at like pretty surgical locations of like where to run schools related work. We're developing that right now. It's going to be specifically in places where we have on the ground organizers. That happens to be 6 key states, including Wisconsin, Pennsylvania. Lots of people are focusing on those 2 states, but we have folks also in Minnesota, Ohio, and a couple others. And right now we're really, again, just like developing it, especially as we kind of ingest and like compute direct pay. Our office is also like closed for the first week of July, and most staff are out also the second week of July. So we'll be coming back and kind of formulating all this in time for the beginning of the school year, when many of our organizers are going to basically be launching new basically like new weeks of action for when school comes back in. And some of the main work is going to be with action teams, which is what we call chapters in schools. And I am really excited and hopeful that that the folks leading some of this work are young people. So I will be much more prepared to share on our next call in August.
Great. Thanks for the quick preview, Ash.
Yeah.
Anything else quickly? I saw Anissa, the Center for Green Schools' first webinar is this week with the broader overview of federal funding opportunities for schools.
Yeah, I'll just I'll just I flagged in the chat, but we're gonna come out with the direct pay fact sheet very soon, and we'll follow up with some webinars as well. So I'll keep you all posted on that.
Great. Awesome, Harley. Cool.
Okay. Thanks, everyone. Happy summering,
everyone.
and see you August 23rd, or at least on the Center for Green Schools webinars. Thanks so much.
Thanks. Bye.